we got to talk about the golds, plural. Physical gold and the digital gold, Bitcoin. I know there are a lot of gold maxis that watch these videos, a lot of Bitcoin haters, a lot of gold-only physical asset believers. And as you know, I am a member of the club of gold going to 8,000. I can see it even going to 10,000 in a hype phase towards the end. But I am also a member of Bitcoin going to 1 million. And in this video, I will explain to you how this will happen. What's the path of Bitcoin going to 1 million? And at the same time, showing you why, if you've been an emotional Bitcoin hater just on principle, it will be very beneficial to your profits to rethink your stand, because Bitcoin is going higher. It just broke out to a new all-time high. Next stop, 150 to 155. And you can make money with this, or you can cry about it. I prefer to make money. Let's talk about it.
Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month.
Look, you know I love gold. You know I love silver. I love uranium. I love commodities. But you know what I love even more than commodities is making money in the market. And the fact is, we will make a lot of money, more money than we would with gold, with the digital gold of Bitcoin. And the reason is that the whole investment thesis of Bitcoin has changed, that the whole structure of supply and demand has changed. And this is what I want to show you in today's video, and therefore, hopefully, get you to rethink your position on Bitcoin. Because it's not too late, and there's a lot of money to be made in the digital gold in the coming years. So let's go about it this way. Let's start this way. Gold had a couple of really nice days. All right, it went up quite a bit and has been up 12% since the April lows. That's a very, very good performance. However, at the same time, Bitcoin has been up 48%, 4x as much. I don't know about you, I prefer to make 48% over 12% in the market. It's basically 3 years of returns in the stock market in not even 2 months. That's the power that Bitcoin can give you. So here is the thesis behind Bitcoin. And to me, it got crystal clear when I was in Dubai at the Token 2049 conference in the beginning of May. So I've been a supporter of Bitcoin, but never a Bitcoin fan since Bitcoin was $1,000. So I first recommended it to client. I was the first one in Germany to do so at around 1,070. And the public records are for that one. So I've been on this train for a long time, and I've seen it change. And I am with you if you're a crypto skeptic. I'm with you on a lot of the smaller cryptos, even the altcoins. We're not even talking about the meme coin jokes. That's ridiculous. It has nothing to do with investing in the financial markets. But Bitcoin is now its own entity. And to understand this, you need to understand the original thesis of Bitcoin being an alternative to the fiat system has failed. Okay? That's failed. That's gone. However, there is a new investment thesis that has taken over in about the past 2 years, but it really, really triggered this April. And this is Bitcoin is digital gold. So the reason why so many investment banks are changing their tune on Bitcoin is this digital gold investment thesis. Last week, the CEO of BlackRock said we will see Bitcoin far exceed $500,000 in the next 5 to 10 years. This is the CEO of BlackRock. This is the smartest of the smart money. If you don't believe me, fair enough. You definitely should not believe some of the finfluencers that are like 18 years old or 20 years old on YouTube that have never seen a full market cycle, that don't know anything. But you'll be smart to listen to the CEO of BlackRock. Just this week, Jamie Dimon, again, the smartest of the smart money, said that JP Morgan will now allow its clients to purchase Bitcoin. Jamie Dimon, has been the ultra bear on Bitcoin. And while privately he's still holding the stance and is very skeptical, right? Guess what? He is in the business of making money. He sees the writing on the wall. More institutions, more clients want to buy Bitcoin, so JP Morgan is going to offer it. Vanguard is going to be next. And this leads us to the case for Bitcoin that you need to understand. The reason why Wall Street hated Bitcoin and crypto is it was a real danger to their existence if it would really have become an alternative to fiat currencies, which that was never a realistic option. Governments would have never allowed that. But also they can't control it. Now, they still can't control it. But the thing about Bitcoin is there's a limited supply. There'll be 21 million and that's it. Right now, there are about 19.7 million Bitcoin mined. 3 to 4 million are estimated to be lost. So that's around 15 to 20% of the Bitcoin supply is gone forever. So they may not be able to control it, but nobody else can either. And if they just buy up a lot of Bitcoin, then they actually can control the Bitcoin market. And that is exactly what Wall Street loves. BlackRock has been buying Bitcoin like crazy. At the Token 2049 conference, the estimates were that if BlackRock keeps buying at the pace they have been in the past years, by next year, BlackRock will hold more Bitcoin than Satoshi Nakamoto. And the same, by the way, could be true for Michael Saylor and Strategy. So, this is the important part. These institutions are buying Bitcoin and they're taking it off the market. Then we have the ETFs, started January 2024. This is the first big game changer. Why is this the big game changer? This gave access to the older baby boomer generation to buy Bitcoin. The baby boomers have all the money. We're talking trillions. So even if they just invest a tiny fraction in Bitcoin, that makes a big difference for a small market like Bitcoin. Remember, 9.7 million available right now, 3 to 4 million gone. Those are gone. So we're down to about 15 to 16 million Bitcoin. The whales are not selling. BlackRock is not selling. Saylor is not selling. You see what's happening here? Bitcoins are getting taken off the market. The supply is going down. Okay? The baby boomers that are buying ETFs, Bitcoin ETFs, which means these ETFs have to buy the Bitcoin in the market, they're buy and hold. They're not selling. This is the secret. We are getting like diamond hands is what the crypto sector calls it, right? And we get a lot of them. They're coming in the market now. They're sucking up the Bitcoin, but they're not giving it back. This is why there's no alt season. If you're a crypto fan, you're watching this, you're like, yeah, I know most of this will help me. Well, you may not know this, okay? The Bitcoin dominance cycle, over. Forget it. Alt season, over. You can forget it. That was in the past. Why is that? I'll talk about this in an upcoming video, but the main fact is, it is because we have a shift in the structure of the people that are now investing in Bitcoin. They're not trading it, right? Because when they were trading it, then they would do the Bitcoin run and then they would shift their money to the altcoins. Well, BlackRock has no interest in altcoins. Saylor has no interest in Ethereum or Doge or Sui or Solana. The baby boomers have no idea how the technology works for Avalanche or Cardano. They're buying Bitcoin because that's a digital gold. That's the investment thesis they understand, and they're holding it. So money gets taken out, Bitcoin gets taken out of the market, out of the supply. The demand is rising because more and more institutional investors and baby boomers, with each new all-time high, gonna jump on the Bitcoin train. And that is what's pushing up Bitcoin. And this is how Bitcoin is gonna go to 1 million, right? Markets are supply and demand. We have a limited supply that's actually smaller than the real number because of the Bitcoin that have been lost over time. We have a rising demand with big, big institutional money coming in. And then we have the pension funds. In April, and you see it in the past days as well, for the very first time, we saw a decoupling of Bitcoin with the NASDAQ and the high-tech stocks. That had never happened before. Before, it was NASDAQ went down 10%, Bitcoin went down 30%. But in April, that didn't happen. That was the first sign that the thesis of digital gold is really working. Why wasn't this happening? Because nobody's selling. That's what I've been telling you. The people are buying and they're holding it. They're hodling. They're investors now. The baby boomers are not selling. Sailor is not selling. BlackRock is not selling. So the same we've seen in the past days. And if this continues in 2025, then Bitcoin has the proof of concept as an alternative asset class to the stock market, to high-tech stocks. And that does make it interesting for pension funds, for government funds, for the big university funds. And those hold the real big money. If they just decide, let's allocate 0.5% into Bitcoin as the diversification, we get another demand push. Again, the supply cannot be increased. This is actually an advantage of Bitcoin over physical gold, right? If gold would go to 20,000, there are mines that all of a sudden become viable, economically viable, to get into production. So the gold supply at some point will increase. In Bitcoin, that's impossible. It's not happening. This is the way how Bitcoin is going to go to 1 million. Think about it if you're a gold maxi. Think about this investment case, this new investment case. Be smart. We'll be making a lot of money with Bitcoin and with gold in the market. Any weakness on Bitcoin is a buying opportunity now. The next bull cycle has started. Talk to you later. Bye-bye.